With missiles flying and drones turning into bombs, the nation is in a heightened state of alert. But one area which is often overlooked in the initial flurry of conflict is the actual economic cost of it all, to not just businesses, but also how it may affect your pocket and your way of life. One simple example would suffice. At the start of the 20th century, the United Kingdom was the world's most powerful nation, a superpower on which, as they used to say, the sun never set. Now, the Industrial Revolution of the 19th century had made it the biggest economic power on the face of the planet. Then first, the Great War, later called the First World War, and the Second World War led to Britain's glorious power waning. Rationing and price controls, electricity blackouts, all continued for years in the UK after the war ended, while Britain's debts mounted as it had borrowed heavily to finance the war effort. In 1943, at the peak of the war, more than half its GDP was being spent purely on the war effort. The result? The UK spiraled into decades of economic decay and saw the US replacing it as the world's dominant superpower. Now cut to present times, and India has had its share of rationing, price controls, blackouts, etc. during earlier wars, but the contours of the modern day economy is such that there are newer areas of worry. Take, for example, the fact that our stock exchanges are fluctuating widely in the last few days. The volatility index, that is the gauge which measures fear in the market, spiked 10% on Thursday. International investors are already taking the money out, while gold prices have shot up. Value of the Indian rupee fell by as much as 89 paise just yesterday. Oil prices are relatively reasonable for now, but if hostilities turn into an all-out war, it is not just prices, but even availability that we need to worry about. Sanctions by the UN or even powerful nations could also have a long-term devastation on the India growth story. Also, in such a case, the government spending will also be redirected to the defense sector, which means spending on anything from welfare to infrastructure would take a backseat. That can have long-term ramifications. For the common man, though, if the conflict escalates, the question is how much of an instability could affect prices for essential items. The government, on its part, will ensure that normal life continues as much as possible, having learned from past experiences, and would check on hoarding and those trying to profit off increasing prices. With grain reserves at a full and supply chains functioning normally as of now, we could just expect that the impact to normal life, hopefully, would be minimal. Government sources and even oil companies have also announced on Friday afternoon that there is enough of pulses and essential items as well as oil in stock. But as far as long-term impact to GDP growth and business investment is concerned, there will be a dent, even if matters subside quickly. For example, the travel and tourism industry, including aviation, has already taken a knocking that will last till at least the next season. Even one innocuous rerouting of airlines from Pakistani airspace to longer routes is costing airlines like Air India and Indigo hundreds of crores of rupees. The longer-term impact on economic growth remains to be seen. It's not for nothing that industrialist Harsh Goenka of the RPG Group warned, "War weakens economies, even for the winner."